All right. Welcome back, everyone, for another deep dive.
Yeah.
And today we're going to be looking at Hikal Ltd.
Very interesting.
Yeah, so, we got a big stack of reports here, press releases,
Oh, yeah.
analyst questions, all about their Q2 FY25 performance. So we're going to sort of try to sift through all this stuff
Yeah.
and really pick out what's important and what it means for the company moving forward.
Sounds good.
Yeah.
For those who might not be familiar, Hikal is an Indian company.
Yeah.
Listed on, the Bombay Stock Exchange, National Stock Exchange of India.
Right.
And they're really active in the global chemical industry.
Okay.
So serving the pharmaceutical industry,
Okay.
the crop protection industry, specialty chemicals, all that.
Gotcha. So they're they're a big deal.
Yeah, they are.
Yeah. Okay. So
Yeah.
let's just get right to it. How they do this quarter.
Well, their revenue's up 4% year over year.
Okay.
Hitting 453 crore rupees.
Okay. So a little bit of growth.
Yeah, a little bit of growth, but the real story here is the profitability.
Okay.
EBITDA is up a pretty significant 30% to 75 crore rupees.
Right.
And then their profit after tax, PAT, is up a very significant 45%
Wow.
to 18 crore rupees.
Okay. So big jump in profitability.
Yeah, huge jump.
What do they attribute that to?
Well, the company's executive chairman, Jai Hiremath, he's pointing to a couple things. He says there's sort of a gradual recovering of the chemical market.
Okay.
But then also they've implemented some successful cost initiatives.
Right.
And very importantly, they've acquired new customers.
Okay. So getting some new business in.
Yeah, exactly.
Yeah.
And, he's even using some interesting language in the reports, talking about finding the right chemistry.
I like that.
Yeah.
Yeah. A little bit of,
Yeah.
CEO, personality in the report. I like it.
Yeah. Yeah.
All right. Well, let's break it down a little bit further. We know they have a couple different segments. How did each segment perform?
Okay, well, first let's look at pharmaceuticals. This is their real star performer this quarter.
Okay.
Revenue's up 28.1% quarter over quarter.
Wow. Okay.
And their EBIT margin is almost doubled to 13.7%.
All right. So what's driving that?
So that's really driven by the demand for a couple of their products and services. One is what they call active pharmaceutical ingredients, APIs.
Okay.
And the other is their services for what they call contract development and manufacturing organizations, CDMOs.
CDMO. Okay.
Yeah.
So what is that?
So basically, it's an outsourcing solution for other pharma companies.
Okay.
So they're not just making ingredients; they're actually developing and manufacturing entire products.
Gotcha. So they're doing it for other companies.
Exactly.
So they're not necessarily selling it under the Hikal brand.
Exactly.
Okay.
And they're seeing a lot of success in this segment.
Yeah.
They filed what are called 2 Drug Master Files, DMFs, for new anticoagulant products. And basically, a DMF is a document that's submitted to regulatory bodies, like the FDA here in the U.S. or in Europe,
Right.
that details everything about a drug substance, how it's manufactured, what the quality controls are.
Right. So it's like a blueprint of the drug?
Yeah, kind of like a blueprint, a very detailed blueprint showing how it's made and how it's safe and effective.
Okay. Very interesting.
They also provided what are called validation quantities of a product to a major innovator customer.
Okay.
So basically, this is sending them a small batch
Right.
to prove that they can manufacture it to the specifications required.
Okay. And what was the last thing you said they did?
Oh, they completed 16 customer audits,
Oh, wow.
which are very thorough inspections to make sure they're meeting all the quality and safety standards.
So it sounds like they're checking a lot of boxes in that pharmaceutical segment.
Oh, yeah, they're really on a roll.
Yeah. Okay. So how about crop protection?
Crop protection, that's a different story.
Yeah, because I thought I remembered seeing some mixed signals there.
Yeah, the revenue's down slightly quarter over quarter,
Okay.
and their EBIT margin has gone down to 5%.
Okay.
And that's because the global market for crop protection products is still recovering
Right.
from some excess inventory
Yeah.
and depressed prices
Which is putting pressure on everyone in the industry.
on everyone.
Yeah. Okay. So they're facing some headwinds there, but are there any bright spots within that segment?
Yeah, there are some interesting things.
Okay.
Domestic markets in India are showing a better recovery trend,
Okay.
and they're seeing an increase in these CDMO inquiries, but for crop protection products.
Interesting. So even though the segment as a whole is struggling a little bit,
Yeah.
there are some signs of potential growth there.
Yeah, yeah, exactly.
Okay, what about animal health? I know that's kind of a smaller part of their business.
Yeah, it is a smaller part.
But how is that doing?
It's still a smaller revenue contributor for them,
Yeah.
but definitely something to keep an eye on.
Okay.
They completed the development and validation of 6 products
Okay.
under a long-term agreement
Wow.
with a global innovator in the animal health space.
Okay, so even though it's small now, they're kind of placing a bet that it's going to be bigger.
Yeah, exactly.
Okay.
And it's a good way to diversify.
Right.
If one sector kind of hits a rough patch, you have the other to kind of cushion that.
Yep. Makes a lot of sense.
Yep.
Okay, so we got a good sense of the segment breakdown.
Yeah.
Now let's dive a little deeper into the financials here.
Okay, sounds good.
So starting with their balance sheet.
All right, so their total assets are sitting at 24,603 million rupees.
Okay.
And a pretty big chunk of that is tied up in what's called property, plant, and equipment.
So basically all the stuff they need to make the stuff.
Exactly.
Yeah.
All their factories and machinery.
All of that, yeah. Okay, so how is their cash flow looking?
Cash flow is quite strong, actually.
Okay.
They had a net inflow from operations of 1,682 million rupees.
Okay.
And on top of that, they've been really actively managing their working capital
Okay.
and reducing debt.
Okay, that sounds good.
Yeah, those are good signs for investors.
Yeah, so it sounds like they're in a pretty good spot financially.
Yeah, very healthy.
Yeah.
Yeah, and to back that up, you can look at some key ratios like return on equity, ROE, and return on capital employed, ROCE.
Okay.
Those are both up in FY24 compared to FY23.
All right, so they're getting more efficient with their capital.
Exactly, more efficient and profitable.
Yeah. Okay, so far so good.
Yeah.
But we know these days investors are looking at more than just the financials.
Oh, absolutely.
Sustainability is becoming more and more important.
Oh, yeah.
So what is Hikal doing in that area?
They're definitely not just talking about it.
Nope.
They're taking concrete steps. They're working towards something called science-based targets for emissions reductions,
Okay.
which basically means they're aligning their goals with the latest climate science.
So they're really taking their environmental impact seriously.
Oh, yeah, very seriously.
It's good to hear.
Yeah, and they've actually been recognized for their efforts.
Oh, okay.
They got a bronze rating from EcoVadis.
And who are they?
That's a leading sustainability rating agency.
Okay.
So that kind of third-party validation really carries a lot of weight.
Especially with investors.
Yeah, especially with investors who are looking for companies that are walking the walk.
Right. Yeah, exactly.
Yeah.
Okay, well, we've covered a lot of ground here just in terms of like an overview of the company,
Yeah.
overall performance, the segment breakdown. We've even touched on the financials
Yeah.
and the sustainability initiatives.
Uh-huh.
So what are some of the things that stand out to you?
Well, I think what's particularly interesting to me is, how they're approaching this whole R&D research and development thing,
Okay.
especially within these CDMO operations, their contract development and manufacturing. And the thing is, they have this growing pipeline of projects.
Right?
So it really suggests to me that they're not just riding the current wave.
Yeah.
They're actually trying to build something for the long term.
Oh, okay. Yeah, that's a great point. It really speaks to their vision for the future.
Yeah, exactly.
But is that growth sustainable?
Well, that's the question, isn't it?
Yeah.
I mean, we've seen these challenges in crop protection.
Right.
How much can pharmaceuticals really offset those headwinds?
Exactly.
It's like a ship navigating uncharted waters.
Yeah.
You can have the best tools and the best crew, but you can't predict every storm.
Right. So should investors be worried? Or is this diversification strategy enough?
Well, I think it's important to look at the nuances here.
Okay.
They had revenue growth. It was positive 4%.
Right.
But it's still pretty modest. Okay. And you have to remember, the chemical industry, it's cyclical.
Okay.
So, to understand what that 4% really means,
Right.
you have to look at, the industry benchmarks
Gotcha.
and historical trends.
So context is key when we're analyzing these numbers.
Exactly.
Okay. What about their profitability?
Yeah.
I mean, that was a pretty impressive jump.
It was.
Is that something that investors can count on in the long term?
That's where things get interesting,
Okay.
Their cost-cutting initiatives, that played a big part in that margin improvement.
Right.
So the question is, are those cost savings due to, real efficiency improvements?
Okay.
or are they just temporary measures?
Right. So we need to look a little deeper to see if those are sustainable.
Exactly.
Okay. What about their investments in innovation and R&D? How does that factor into their current financials?
Yeah, R&D, it's a long game.
Right.
It takes a lot of upfront investment,
Yeah?
and those might not show up as immediate financial gains.
Right. It's about building for the future.
Exactly. It's about building for the future, and Hikal's commitment to innovation, that's clear.
Okay.
They've got their R&D infrastructure, their CDMO pipeline is expanding,
Right.
and they're really focused on developing, these new, very specialized products.
Okay. So they're prioritizing future growth even if it doesn't boost their bottom line right now.
That's right.
How do you think investors are going to see these Q2 results?
Probably mixed, I would say.
Yeah.
The strong profitability, the improving financial health, those are all positives.
Right.
But that modest revenue growth and then these ongoing challenges in crop protection,
Yeah.
that might raise some eyebrows.
Okay.
Investors are always looking ahead.
Right. They want to know what's next.
Yeah, trying to anticipate that future performance.
Okay. So it's a balancing act.
Yeah, a balancing act.
Okay. All right. Well, we're going to take a quick break.
Sounds good.
And then when we come back, we're going to continue this deep dive into Hikal Ltd.
All right, looking forward to it. But you know what else is interesting to me?
What's that?
Their emphasis on innovation
Okay.
and strategic investments in R&D.
Right.
Those are things that can really boost investor confidence.
Yeah, for sure. It's about showing that they have a vision for the future
Exactly.
and that they have a plan to overcome those challenges we talked about in crop protection.
Exactly.
Okay, so let's kind of shift gears a little bit. Were there any major regulatory or market changes that stood out to you in these reports?
Yeah, one thing that caught my eye was them mentioning working towards these science-based targets
Right.
for emissions reduction.
Yeah, and that's really aligning with this growing focus on sustainability
Absolutely.
globally.
Yeah, sustainability is not optional anymore.
Yeah.
It's the regulatory scrutiny on environmental performance is increasing,
For sure.
and consumers are demanding these sustainable products.
Yeah.
So this is creating both challenges and opportunities for companies like Hikal.
Yeah, so it sounds like they're making those efforts.
Yeah.
And that could attract investors, improve their brand reputation, maybe even open doors to new markets.
Absolutely.
Yeah. So they're not just aiming for profit.
Right.
They're really aiming for purpose as well.
Exactly.
Okay, now what about their cash flow and working capital? I remember seeing some good things there.
Yeah, their cash flow management, that's another highlight.
Okay.
Strong cash flow from operations, actively reducing their debt. It all points to good financial discipline
Right.
and effective resource management.
So they're not just making money, they're managing it wisely.
Exactly.
Okay, which puts them in a good position to handle anything that comes up in the future.
That's right.
So before we wrap up this part of the deep dive,
Sure.
what aspect of Hikal's performance surprised you the most?
You know what? I think the most surprising thing to me was that stark contrast
Right.
between their pharmaceutical segment
Right.
and the crop protection segment.
Right. One's doing great and one's really struggling.
Exactly. One's booming and the other is facing a much tougher road.
Yeah.
It really highlights how important diversification is.
For sure. It's like having a balanced investment portfolio.
That's a great analogy.
If one sector kind of takes a hit,
Yeah,
the others can help soften the blow.
exactly.
So Hikal being in both pharmaceuticals and crop protection, it allows them to tap into those different market dynamics
That's right.
and kind of balance things out.
Yeah, they're hedging their bets a little bit,
Right.
which is a smart move in such a volatile global market.
Yeah, it seems like a really good strategy.
Yeah.
Okay, so let's zoom out a little bit.
Okay.
Hikal operates in this global marketplace.
Yeah.
It's super competitive.
Oh, it's incredibly competitive.
They're going up against these huge multinational companies. Regulatory landscapes are changing all the time. Raw material costs are fluctuating.
Yep.
So how do they carve out their own space in this kind of complex environment?
Well, they can't just keep doing what they've always done.
Right.
They have to differentiate themselves.
Okay.
And it seems like they're actively trying to address that challenge.
Okay.
Their focus on R&D the growing CDMO pipeline,
Right.
their focus on these niche products, these specialized products. I mean, those are all steps in the right direction.
So it's about finding like what they're really good at
Yeah,
and focusing on that and what sets them apart.
exactly. But it's not just about, products and services.
Okay.
Their commitment to sustainability, that can also be a huge differentiator.
For sure.
It can
Yeah.
attract these, new investors,
Right.
these customers who care about environmental and social responsibility.
Exactly. Yeah.
So they're not just aiming for, profitability.
Yeah.
They're aiming for purpose as well.
Yeah, for sure. Okay, so before we leave our listener with a final thought here,
Okay.
there's one last thing I wanna touch on.
Right?
Remember their balance sheet? How a
Yeah.
big chunk of their assets are tied up in property, plant, and equipment.
Yeah, all those factories and machinery.
Yeah, exactly. And that's pretty typical
It is.
for a company like this.
Yeah, it's a very capital-intensive industry,
Right.
chemical manufacturing.
But it also means they have a lot of fixed costs.
Exactly, a large fixed cost base.
So how agile can they be
That's the question.
in response to, market changes,
Yeah.
unexpected disruptions?
Right. So their size and structure, while it gives them scale,
Yeah.
it could also make them a little bit less flexible.
Okay, that's a really important point for investors to think about.
Absolutely.
All right, so we've covered a lot of ground today.
We have.
We've explored Hikal's performance in Q2,
Hmm.
the challenges they face, their vision for the future. But as with all of our deep dives, we want to leave our listener with something to ponder.
Absolutely. So here's a final provocative thought for you all.
Okay?
Will Hikal's investments in innovation and sustainability be enough to catapult them to the forefront of the global chemical industry?
Okay.
Or will they need to make some bolder moves
Mm.
to really stand out in this crowded and competitive market?
That's a great question. And only time will tell how their story unfolds.
Exactly.
But, from what we've seen in this deep dive,
Yeah.
they're a company that's not afraid to adapt, to innovate, and to strive for that sustainable future.
For sure.
So stay tuned because the next chapter is going to be exciting.
I think so too.
All right. Thanks for joining us on this deep dive into Hikal Ltd.
Thanks, everyone. Honestly, the thing that surprised me the most was that stark contrast between their pharmaceutical segment and their crop protection segment. One is like booming, and the other is facing a much tougher road. It really underscores how important that diversification is, wouldn't you say?
Oh, yeah, for sure. It's like having a balanced investment portfolio. One sector takes a hit, the others can kind of help soften the blow. So Hikal being in both pharmaceuticals and crop protection, it lets them tap into different market dynamics and balance things out a bit.
Exactly. They're hedging their bets, which is, pretty smart in such a volatile global market.
Yeah, it seems like a really good strategy. Okay, so let's zoom out a little bit. Hikal operates in this global marketplace, and it is incredibly competitive. They're going up against these huge multinational companies. Regulatory landscapes are always changing. Raw material costs are fluctuating. So how do they carve out their space in such a complex environment?
Well, I don't think they can just keep doing what they've always done, right? They need to differentiate themselves.
Oh, okay, yeah. So what can they do? What can they do to stand out?
Well, it seems like they're trying to address that. I mean, their focus on R&D, this growing CDMO pipeline, their focus on these niche products, these very specialized products, those are all steps in the right direction.
So it's about finding, what they're really good at, what sets them apart.
Exactly. But it's not just about the products and services. Their commitment to sustainability can also be a really big differentiator. They can attract these investors who really care about, environmental and social responsibility.
For sure, yeah. So it's not just they're not just aiming for profitability, they're aiming for purpose as well.
Exactly.
Okay, so before we wrap up this deep dive, there's one last thing I want to touch on. Going back to their balance sheet, a significant portion of their assets are in property, plant, and equipment.
All those factories and all the machinery.
Exactly, and that's pretty typical for a company like this. It's a very capital-intensive industry.
Yeah, chemical manufacturing, it takes a lot to get set up.
But it also means they have a lot of fixed costs. So how agile can they really be when, the market changes or there are disruptions?
That's a really good question, because on the one hand, their size and structure, that gives them scale.
Right, it gives them a lot of capacity.
Exactly. But it could also make them less flexible.
That's a really important point for investors to consider.
Absolutely.
Okay, so we've covered a lot of ground today. We've really explored Hikal's performance in Q2. We talked about the challenges they face, their vision for the future. But like with all of our deep dives, we wanna leave our listener with something to ponder.
Absolutely. So here's a final thought. Will Hikal's investments in innovation and sustainability be enough to really put them at the forefront of this global chemical industry?
Hmm.
Or are they going to need to make some bolder moves to really stand out?
That's a great question. And, only time will tell how Hikal's story unfolds. But from what we've seen in this deep dive, they're not afraid to adapt, to innovate, and to really strive for a sustainable future.
Absolutely, yeah.
Yeah.
It's going to be interesting to see what they do next.
Okay, well, thanks for joining us on this deep dive into Hikal Limited.
Thanks, everyone.